Alright, so obviously we know the first thing, you just go onto your higher time frame, and as you can see, I'm using the 1 hour as my higher time frame. So right here you can clearly see that this is a pullback, and then price retraced with a good number of candles. As you can see, these are more than 3 retracing candles, almost something more than 5, so that's good. And you can see this is a valid pullback, so price has taken that recently formed buy side liquidity, and we said once the recent one, of which we usually call that inducement, once it's taken out, then that low is confirmed to be a valid a valid swing point. This low is confirmed to be a valid swing point, meaning now if price reverses and breaks past the low, then that's a break of structure to the downside. And we can clearly see a break of structure to the downside, and that creates our new trading range, with this one here being our high, and of course this one here being our low. And right here I can clearly see that this one here is our minor inducement. Let me zoom so that you can see the candles correctly. I think that's great. Alright, so exactly here, let me get rid of this, and you can clearly see that this here is up. Let me use a line, even though I don't want to use one. Alright, let me make it like this, and let me change the color to black. Yeah, right. So right here we can clearly see that on our trading range that this one here is our inducement, and if there is a minor inducement, the trading range high is our major inducement. So even though it's our trading range high, it is the major inducement. Alright, so right here this is the main inducement, this one is the major inducement. We said a sweep from this, and then price retracing back, breaking past this swing point. This will confirm this one here to be a break of structure, and in that case there will be no a shift in bias in any place. Like, we cannot say that this here is a change of character, and so this also will be a change of character. In that case, we'll just be saying this here is an inducement sweep, and so after an inducement sweep, of course, a break of structure. So in this case, this is a complex one. You can clearly see price did that. It swept with this long wick. Probably I think this wick was created due news. So, and then after that you can see the breaks past this, and so this one here is a break of structure. I can even shift to the 15-minute, and you can clearly see this break of this area was like with a big displacement. So this means that this one is a change of character, and we have shifted bias from being bearish to bullish. But if it was a week, like just a simple week, then in that case it will be a major inducement sweep, because like I said, that's a trading range high, and at the same time it's an inducement. Alright, so since it's not a sweep, it's a break, then this means that this one now is our change of character. But if it was a sweep, that will now be just an inducement sweep, and there is nothing like shifting of bias there. Alright, so this one here is our low right now. That's our low. Of course, we have our new trading range that ranges from this low and this one here being the high. So right here you can clearly see that there is no any inducement, like price has not created any pullback, and for me to take that buy, of course I'll be waiting for price to come all the way to this trading range low, and it should not break, it should just sweep with a wick and give that reversal. Of course I'll be buying till that area. Alright, so that's what I'm looking right now. And by the way, it is also the same on the 15-minute. You can clearly see yeah, exactly right here. So you can clearly see inducement is taken out, break of structure. This one is a change of character. In fact, it's seen clearly on the 15-minute. So you can clearly see on this range, which was created with these long bullish candles. You can see on the range there is no any internal range liquidity. In that case, there is no any inducement, there is no any valid pullback. So this means the inducement in that case, of course, it will be now our trading range low, and in that case it will be the major inducement. So for me to actually take that buy, I will need to wait for price to come all the way here down. I'm not interested with what it's doing inside the range. To come all the way there down, sweep this sweep this major inducement and then give that ultimate reversal all the way to this opposite external liquidity. So that's the view. And right now, what I should be doing is actually waiting. So right now I'll be waiting for price to come all the way and sweep this area. So that now after that, this will be a entry module, and that entry module we will be calling it inducement sweep entry module, because this here is a major inducement. And we said that once you have interacted with a higher time frame key area, or liquidity level, in this case it will be a liquidity level, because if it was a key area, then it's either the decisional POI or the extreme POI, just like I highlighted on a previous session. So this here, it should be a sweep. If we get a break past that, then that will be a change of character. All right, so let me run price. And exactly right here, you can clearly see that price is approaching our zone. Exactly right there. You can clearly see a beautiful sweep right here. This week, just wicked below, grabbed that inducement and gave this good reversal pattern. You can clearly see this is what we call the bullish engulfing pattern. So if I was to take a direct entry, of course, you know what will happen. Yeah, you can clearly see that this here was a sweep. This one, this week here was a very a good sweep, very clean. And if I was to take a direct entry, you can clearly see this red candle. Of course, you need to make sure that this candle is not an insider bar. Then after that, now exactly there you can see price. You can see this candle broke past the previous candle low. These we are all insider bars, but this candle isn't. And you can clearly see the bullish candle that grabbed that major inducement. It closed bullish. So this says that there is huge, or there is massive buying pressure in this area, and we can confirm that by see a long wick. We say that's a long wick rejection, and that candle needs to close bullish. Then after that, of course, you will now be taking the entry, and this is like a strong reversal, because it is not only a long wick rejection, it is also a bullish engulfing. You can see this red candle was engulfed by this bullish candle, so that like a strong reversal. And of course, you can take your entry exactly right there, stop loss below that wick or slightly below that wick or at that wick, and of course targeting the opposite external liquidity. So that's if I was taking a direct entry. But now in this session, we are actually looking forward for the top down analysis. Of course, now that means I'll be looking for lower time frame executions. And so let me get back now. This here is the 1 hour. We said if you mastered, or if you noticed somewhere that I said if you're using the 4 hour, you'll be getting, or you'll be using your lower time frame as the 15 minute. If you're using the 1 hour, you'll be using your lower time frame as the 5 minute. So this here is the 1 hour, and you can clearly see I have not done anything else. Like I was just marking the structure and waiting for price to interact with my key area or liquidity level before I can actually get into the lower time frame. You can see I've not shifted to the lower time frame before price has interacted with the key area. So right now, since we have interacted with the key area, then now that's the right moment to shift into the lower time frame, and in that case, of course, it will be the 5 minute. Right, and if you remember, I said that when you get into the lower time frame, the first thing you need to make sure that you have identified your trading range. Trading range, so that you can get to know where your major inducement is. Exactly right here. Let me change the color of my brush. or let me use the, yeah, these ones, but I'll change the color to, let me now use is it blue or red? Yeah, let me use the blue, or no, let me use the red. All right, so exactly right here you can clearly see that this here was a valid pullback. Yeah, right here you can zoom so that you can all be with me. You can clearly see, yeah, this here was a valid pullback. You can see this bullish candle, this bearish candle took out the high of that previous bullish candle. So that's a recently formed valid pullback. That buy side liquidity is the inducement. Then you can see price retraced, took out the inducement. We don't care what price does after that. All we need is price to reverse and break past this swing point. And exactly that's what price did, exactly right here. Then after that, price, as you can see, price created another valid pullback exactly right here. Right, so right here you can see that's a sweep, and this one here is not a valid pullback, so this means that this one here is our inducement, and in that case, major inducement. We say that we usually need to use the major inducement, and I said the reason as to why the major inducement is the one like I usually prefer is because it filters out the times where price is messy, and like just use the major inducement. Yeah, and yeah, just use the major inducement. I know you can use the minor inducement, but I usually prefer trades that involve the major inducement, even on the lower time frame execution. So right here, you can clearly see that's the major inducement. And I said the inducement changes its role once we have interacted with the key area. And you can clearly see here, that's the sweep of the key area. So once price has interacted with the key area, it can be a key level or a liquidity sweep. It doesn't matter on the higher time frame. Get into your lower time frame and mark the trading range. That now will give you the clear picture of how to identify that major inducement. You may find that the trading range may have minor inducement, and I said the trading range high is the major inducement. So in that case, I will wait for a break past that trading range high because I need a break past the major inducement. Then now I can start participating. But in this case, we can clearly see this here is our major inducement very perfectly. So after that, we can clearly see that everything now is clear because this one here is the inducement. Right, let me reduce this. Right, so you can see that this is the inducement. You can see that's the pullback, and in that case, it's a major inducement. All right, this is a thing that I need to note. I said that when you get into the higher time frames, I mean, when you get into the lower time frame, this one here is the inducement on the lower time frame on that current trading range. This one is the major inducement, but once you have interacted with the key area, this changes its role from being an inducement to being a change of character, and that's the glitch of this lower time frame execution. So once you have identified that change of character, then everything else just resets to normal. You just need to identify your inducement. Then after that, once the inducement is taken out, of course, identifying your order flows, your order blocks, and just keeping on executing as usual. All right, so exactly right here, you can clearly see that price created this pullback, and of course, price, you can see, retraced back, took out that inducement, and in this case, this one here is the order flow. So this means that in our case here, our trading range does not have an order flow. So this means we will be looking forward to take our entries based on order blocks, because this order flow was mitigated by this pullback that created our major inducement. And we said we don't buy without major inducement. Someone asked me yesterday if after that break of structure, you can actually take an entry after this break, like a good break, then of course your stop loss at a reasonable place, then target that high time frame external liquidity. No, I don't recommend it. Wait for the inducement first. Yeah, wait for the inducement, then after that you can just you see, when you see the inducement, then after that I can just recommend you to, if you want to do that, then just wait for the inducement to be taken out, and it doesn't matter if price breaks past this or sweeps this, just do something like that. And yeah, of course, target there. You can see now you have placed it at the inducement, so it doesn't matter if price sweeps that inducement or breaks past that inducement. What matters is your SL needs to be at that trading range low. Right, but that is not something that I recommend. Just follow up with the normal way that we usually do it. So right here you can clearly see this is the inducement, and in this case this is not a valid sweep. Let me zoom so that you can clearly see this is not a valid sweep. I said the candle that sweeps the inducement, we need to see like price does not like close below that low, and you can clearly see this bullish candle closed below that low, so that's not a sweep. And yeah, we said the primary option is not is not valid in this case because the order flows are all mitigated. So we are now left with the secondary option, which is the order blocks. So if I see this bearish candle, you can clearly see this bearish candle is not associated with a fair value gap, even though it's the one that took out the liquidity of this previous candle, and moreover the liquidity of this this sell side liquidity. This candle is not associated with a fair value gap. We said our POI needs to be associated with a fair value gap. Order flow. Order block in that case. Order flow doesn't. We don't consider FVGs on the order flows, but on the order blocks, that order block needs to be associated with a fair value gap. So right here you can see I said that once the one that took out the liquidity is not associated with a fair value gap, we shift to the one that is associated with a fair value gap. And right here you can clearly see that the next one, the reason is why I didn't pick this one here is because it is an insider bar. We said like in true SMC we completely forget about these insider bars. So exactly right here, this is the next candle, it is associated with a fair value gap, and I said even if the fair value gap is mitigated, we need to make sure that that fair value gap is not fully mitigated. If the fair value gap is not fully mitigated, then our order block is still valid. And this one here is of course our 15-minute trading range. And someone also asked me if after mitigation of our extreme order block or after mitigation of that lower time frame POI, since this here is the 5-minute, can you still shift to the lower time frame so that you can take an entry here and probably you can target a fixed RR, or you can target this high, this higher time frame. Of course, if you shift to the lower time frame, this means that you are using this lower time frame as your this current lower time frame as your higher time frame, because now you'll be shifting deeper again. So if you're using the 5-minute, if you decide to shift to a lower time frame, and since this is the 5-minute, of course now you'll be shifting to the 1-minute, and of course you'll be doing the same here. After the mitigation of this POI, you will need to mark your major inducement, then wait for a break past that major inducement. That is what we call the change of character. Then after that, wait for the lower time frame, that is the 1-minute inducement. Again, it doesn't matter, we say that it can be minor or major inducement, but of course we usually prefer the major. So then after that, of course, you're just trading normally, mark that order block or that order flow, then of course set your limit order and target this 5-minute external liquidity. Or you can set a fixed reward. If let's say you want something like a 1:4, 1:5, then you can set it. Maybe it will be somewhere higher than this, or maybe below. You don't know. It actually depends with the length of the trading range. Right, so exactly right here for us, I will just be using the 5-minute because the 1 hour 5 minutes. If you want to go deeper, you can. That's what I do. 4 hour 15, then from 15 3 minutes or 5 minutes or 1 minute. It actually depends with the 15-minute structure. Is it big? Is it small? Is it medium? Like all of that will determine if I'll be using the 5-minute as my entry time frame, or if I'll be using the 3-minute or the 1-minute as my entry time frame. Okay, so guys, you can clearly see price has mitigated this order block, and this is the moment to actually take that entry. Of course, I usually prefer setting of limit orders rather than waiting for these reversal patterns. I usually set my limit order here. I know price has moved already, but I usually set my limit order, and I know most of you are aggressive. You'll be placing your stop loss below this order block. I know this may work, but in the long run, I think this will actually mess up with your psychology, because you'll be getting a lot of stop outs, and this may end up questioning yourself if this trading thing is actually, or this strategy is actually working and all of that, and that's psychologically messing. So just place it somewhere where when you get stop out, you just know that the whole trade is done, like there is no any chance of you actually getting another entry. And exactly right here, we know this is the major inducement, so there is no need of me extending this stop loss, because if price breaks past this low, then that means that the sweep or the higher time frame sweep is no more. Right, so my stop loss exactly or tightly at this trading range low, yeah, it should be, I mean, tightly there, yeah, exactly right there. And of course, the target now, it will be all the way to the higher time frame external liquidity. Or now this is where now free will comes in. You can just target a 1:3. It actually depends with you. Yeah, you can just go for a 1:3, a 1:2. It actually depends with you. Yeah, most of you guys they prefer 1:3. Yeah, they usually set a 1:3 as their fixed RR, but the final TP, of course, I said it should be this one, yeah, the higher time frame. So you can see this is a 1, this is a 5, and if you had to use this tighter stop loss, of which you'll be placing it below the order block, you can see that's almost 1:20. And see, that's 1:20. I know that's a good RR. It sounds nice even to catch such a trade, but I don't recommend it. So just be conservative. A 1:5 is better. I mean, is better than this 1:20. I know in terms of profit it's not, but psychological wise, I think the 1:5 is better. All right, so exactly right there. So let me run price. I said the process of buying continues, and of course, if price breaks past this high, this means that we have just created ourselves a new trading range, and of course, we'll be continuing to stake the buys until that end. That doesn't mean that you should always like be staking the buys. I mean, it's when you get into the market and see where you will be participating at. So yeah, things like that. All right, so let me run price, and since I'm on the 5 minute, let me just place some candles here, and let me run the price. And as you can see, price is doing that. So let's see if price will make that break of structure. All right, that is great. So this means that someone who like placed their stop loss, of course, below this POI, then they would have captured that good trade. Wow, that's great. But anyway, like I said, always be conservative. So that's a break of structure, and like I said, we actually trade normally after here by just using the normal knowledge that we have. Now it's like now we are trading based on the same time frame. It's just that now we will be setting limit orders instead of actually waiting for reversal patterns, because there is no need for you to wait for reversal pattern. It will end up reducing your risk to reward, and you can just set a limit order. And yeah, because you know the overall bias is bullish, so why should you wait for reversal pattern? And you will be setting your SL at a reasonable place. I mean, a place where if price takes you out, then the chances of you getting into that trade completely gets invalidated. So yeah, so exactly right here we can clearly see that this one here is the inducement. Let me do this, let me do that. All right, so this is the inducement, and we said we need to wait for the inducement to be taken out before we participate. So exactly right there, the inducement is taken out, and this is not a sweep, but we can clearly see that this one is a mitigation of this order flow. So, but where's the extreme order flow? All right, in fact, this here is the extreme order flow, because this one here is mitigated. You can clearly see that's mitigated. And also, if I shift to this other one, I mean, if I shift with this other one also, you can see it is mitigated by that pullback. So this means that that is the extreme order flow, and you can see the inducement is also taken out. So yeah, let's see. If price decides to fail that, then price will be looking forward to mitigate the extreme order block. Anyway, let's see. Right, so price didn't make that. I just sensed that because you can clearly see that this order flow is not even on the equilibrium of this trading range, but that doesn't make that order flow invalid. No. So this here is the order flow, the extreme order flow, but it failed. So right now we just need to look for the order block, and exactly right here I can't see any valid order block because this order block, as you can clearly see, it was mitigated, and also this other order block was mitigated. And so this is where now some other knowledge come in, like you take your fib, drag it from that low all the way to this high, and you do this. So this is a glitch, it's not recommended. All right, so 0 point, all right, this is not all right, so that and that, you can clearly see the level 0.618 and this one 0.78, and then you do that. And so you will be looking for your trades inside this zone, I mean this zone, this zone, this one. That's where you'll be looking forward to take the entry from, because that's the golden zone. I don't know what they call it, OTE, I don't know, but this here is the zone that price will most likely give that reversal. But if you decide not to, then in that case you can just wait for price to create a reversal pattern, but your stop loss needs to be below here. Right, so let me delete this. It's not a must actually for you to use that, but that's ugly, you can use it. Right, so right now I'll be waiting for a reversal pattern there, and yeah, so let's see. Exactly, that's enough. You can clearly see that this here is the reversal pattern, and also at the same time you can clearly see this is happening on that zone that I showcased exactly right here. Let me drag them correctly. Yeah, there, and this one of course at this high, so you can clearly see it's happening at this zone. And it will be even better if price gets into this extreme one, but the one that price most likely will get a reversal from, then it's this one here. So this is where you'll be looking for your reversal pattern. Then once you get that reversal pattern, that's when now you'll be taking your reversal from. So exactly right here you can clearly see this morning star pattern very perfectly. And yeah, of course the aggressive traders will be placing their stop loss below here. All right, what kind of position am I using? We are actually on a long position, not a short position. So yeah, this one. So actually you can clearly see here, and I know the aggressive traders will be placing their stop loss below there, but that's not recommended. I know it can work, but actually just place your stop loss at a safer place. Be conservative, and yeah, just be conservative. Right, so exactly right here. And by the way, this is something else. Once price breaks structure, like in this case, move this SL, I mean move your SL from this area to this low, exactly here. Then once price makes a break of structure, you can move your SL at this, the other break of structure. But anyway, it's not a must to do that, but that actually keeps you, even if price reverses back, you will not be like, you will still have some profits on the line. Like instead of actually price reversing back all the way to your SL. So exactly right here, you can clearly see everything is good. And so let me run price. Right, so price, as you can see, for the trader who actually placed their stop loss below here, you can clearly see now in this case, he gets or she gets their first stop out. All right, so let's see if we'll get another reversal pattern here. Exactly right there. So if they now say like this is the reversal pattern and they place like their entry right there, let's see if price will stop. Of course they'll be placing their stop loss below here just to secure those insane risk to rewards. Of course you can see another stop out. That's the reason as to why I usually say that you place your risk to reward at, you place your stop loss at a reasonable place. Right, so exactly right there you can see that's our reasonable place. You can see we are still on the trade. Price has yet to mitigate our SL. So as you can see right here, let me make the price first. Right, you can see price has now got out of that consolidation phase and price is actually on yeah, full TP, not full TP, I mean actually on our direction, which are on our favor. And of course I said you should be targeting the external liquidity. I mean that's the final TP. It's upon you where you'll be targeting. You can use a fixed risk reward. You can see now the risk reward in this case it's a good one, and also you have like your SL also is your SL is also safe. So you can see this is the greatest option actually. All right, so exactly right here. Let me continue running price. So if price makes a break of structure, of course we'll be continuing to check the buys. Exactly right there, you can see a break of structure. So right here, that's our break of structure, and this one here is a low. So we are currently in a new trading range, and the process of buying actually continues and continues. So right here, where is our inducement? Our inducement is this one, and in this case is our right. This is not our inducement. Our inducement is this one, and in this case is a minor inducement. So let's see what price does. All right, is this a valid pullback? No, that's not a valid pullback, but this is a valid pullback. So luckily we have got our major inducement, and I really love this. When there is an involvement of a major inducement, we keep on shifting. So exactly right there. Right, so let's continue. Right, exactly right there. You can clearly see that the major inducement is actually swept by this candle, and this candle closed bullish. So the entry was supposed to be exactly right there. I mean, after the closure of this long wick rejection, stop loss, of course, in this case, with no doubt, you should be placing there because it will not make sense for you to place your SL at the trading range low. You can clearly see how big that SL is, even if it's safe. Now that's not like a reasonable way of actually doing it. Yeah, sometimes we just need to play aggressive a little bit. So you can see that's a sweep of the major inducement, and of course this one here will be our break of structure. I need to use the brush, I guess. Okay, you can see prices skyrocketed all the way, but of course our target profit is not there. It's obviously right. This was an insane entry. If price does not stop me out here, then this will give me an insane risk to reward. You can see that that's 1:27. Whoa, it's not like it's not that easy to get such insane risk to reward, but it happens. Alright, so exactly right there. You see this trading range low. In this case, it's our major inducement. So in this case, then I wouldn't like I think if price it's yeah, I think in this case our stop loss was supposed to be below here because of price can actually do something like reversing back and taking this one here as our major inducement. So by doing this, it actually makes that room for the major inducement to, yeah, the sweep of the major inducement. Anyway, let's see if price makes a break past that. This means now our stop loss will now be safe at this low. All right, so let me continue running price. So as you can see, price has taken that, and by the way, this here is not a, as you can see, this is not a sweep, this is a break. So price has made a change of character. All right, so price has made a change of character in this case. So this means we'll be getting a stop out here. I'm just sensing it. All right, let's see. Yeah, exactly. We got that stop out, and right now it's obviously waiting for price to, yeah, to make a change of character. Of course, right here price has not taken out the inducement, but here's the inducement. And I said once price makes a change of character, we don't trade in the direction of which it's not aligning with the higher time frame. We need to make sure that price makes a change of character again, so that we trade based off the alignment of the higher time frame. So exactly right here, you can clearly see that this one here is our inducement, and I will not even mark the POIs because I'm not interested for the sell. I'm just interested for the change of character. So let's see what price does. All right, so we need a, all right, exactly, that's good. Price ended up, as you can see, price ended up making a change of character without making a break of structure to the downside. So this trading range is actually very big. I think it aligns with the 15 minute, so it will be worth it for me to get into the 15 minutes, because this trading range is too big, and I guess there will be some noise on the 5 minute. So right, you can see this change of character on the 5 minute. In this case, it's our inducement, and yeah, of course that will be our break of structure, because we said after the inducement this way is a swing point, and if price reverses and breaks past that, that's a break of structure. Actually, this pattern works in every time frame. When you see such a pattern, just know that that's a break of structure. Yeah, once the recently formed valid, I mean the recently formed, it doesn't matter buy side or sell side, once it's taken out, that swing point that was that was created there, once price reverses and breaks past that, then that's a break of structure. All right, so anyway, this here is our trading range low, and right now if I am to mark the inducement, in this case there is none. So yeah, let me change this to 15 because I'm currently in the 15 minute, and note that I'm only on the 15 minute because of this range. It's like huge. Yes, I can use the 5 minute, but on the 5 minute this trading range is huge and it will lead to some noises. If I see things like this, I usually shift to the 15 minutes so that I can reduce the noisiness. All right, so exactly right here, price is reversing. All right, price has created a major inducement exactly right here. So you can see this, all of this on the 5 minutes will be a big range, and all of that. So right, price created another one here. No, this is not a valid pullback. So all right, but this is a valid pullback. So I'll be shifting the major inducement to the recent one exactly right there. So let's see. Yeah, exactly right there. Price has taken out the major inducement, and in this case it's not a sweep, it's actually a liquidity run. So right here we have our high confirmed. I mean this high, it's now confirmed, and this is the moment now to mark the POIs. All right, so exactly right here we can clearly see our order flow very aligned, or very well seen here on the extreme, and it's not mitigated. That's our order flow. And is there any decisional order flow? I don't think so. I don't see any decisional. This is mitigated, this is mitigated. Yeah, this is mitigated, so there's no any decisional order flow. And so where is our engineering liquidity? This is our engineering liquidity, and yeah, nothing else. Yeah, of course, nothing else. So now it's actually running price, and exactly right here you can see this here was a sweep of the engineering liquidity, and we said once we get the sweep, if that wick is not like big, if the body size of this, you can see this is a wick rejection, but that candle body size is huge than the size of that wick. That size of the wick needs to be long compared to the size of the body. So this means that that was a sweep, but not a strong sweep. So I would like, there was some need of me waiting for a bullish candle with good momentum so that I can get that bullish pressure for me actually to enter or confirm that to be a strong engineering liquidity grab. But in that case, this year was not a strong one, and as you can see, price broke past our sweeping low, and so the only place I'll be looking for to place the entry is from here. And so this means that it's worth it for me to actually place my buy from that zone. Of course, stop loss, it will be, yeah, of course, at the low of this area, because you can clearly see this here is the major inducement. There is no need of me extending my stop loss huge. Yeah, wherever it was, I mean slightly below there, that's good. And of course, you can be targeting this 15-minute high. You can see that's a good risk to reward, that is 6.2. Or you can be targeting the external liquidity. Of course, this is our final TP. Of course, there you can see that's a 1:12. That's a great risk to reward. So yeah, back here again. And by the way, like I said, you can always wait for the reversal pattern, but I usually recommend placing of these limit orders because we know the overall bias. I mean, we have the confidence that price is already bullish. So obviously, after price mitigates a POI, it will be, yeah, of course, continuing with this prevailing trend, because the lower time frame is aligning with the higher time frame. So there's no need of you waiting for the confirmation just to confirm that, of course, price will reverse and all of that. All right, you can see this is a good reversal sign, so probably you can do that. And yeah, that was a morning star pattern. I covered this pattern, and of course someone else would have placed their sell right there. But like I said, even after waiting for that reversal pattern, your stop loss still needs to be at a safer place. Always choose to be conservative. I know you can be aggressive, and sometimes you may get lucky and spot that huge risk to reward, but I usually recommend being conservative. All right, so exactly right here you can see, but for me actually I will be setting a limit order instead of actually taking it from there. I'll be setting a limit order on the zone. Of course, it will be some few pips before the zone because of things like spreads. Yeah, sometimes price may actually mitigate the zone. And let's say you placed your limit order exactly at that zone, price can mitigate that zone and still your limit order not triggered because of things like spreads. So that's the reason as to I usually recommend to place some few pips before the POI, so that let's say price will not get deeper into the zone and just a tap into it and just give that reversal, you may still have the chance to get into the trade of your limit order being triggered. All right, so don't exaggerate also, like placing it big this, no, just some few pips before that POI if you're setting a limit order, that is, yeah, somewhere there, and spot a good risk to reward, of course. And then after that, of course, just wait for price to do its thing. Obviously, set and forget. So you can clearly see what price is doing there. Right, so you can see if you was using the reversal patterns and placing your SL at a risky place, I mean placing your SL below these reversal patterns, you can see how many stop outs you would have before actually getting the real move. So you can see the first stop out. Of course, the first one was by the evening star. Price disrespected that, then created another pattern here, price disrespected that, and then price respected this bullish engulfing. So you can see, like if you had placed your stop loss below here, like we did with the limit order, you have actually get rid of all these stop outs and all of this stress of actually, yeah, then after that, of course, just running price. We know our break will be here. So after this break, yeah, you can clearly see that's our break of structure. So let's see what price does. And price is heading upper and upper and upper. Of course, price broke the structure. After the break, I usually recommend getting back to the 5 minutes. Yeah, the 5 minutes. So anyway, nothing much here. Price did that, and sweep of this. So what is the 15 minutes saying? It's not aligning. I will not do anything there. So let's see if price creates another trading range. All right, so after this, I think price has moved like pretty much huge here. You can get back into the 5 minutes, and we can clearly see that our inducement is actually here. Yeah, that's our inducement. And of course, this here was a, yeah, you can see the liquidity was taken out here. So on the 5 minutes, of which is the time frame that we are supposed to be using, you can see that's a break of structure. And this here is the POI, the order flow, the extreme order flow. So yeah, let's see what price does this year. Of course, if you're asking why I have not like used this one, this is because this here is not a valid pullback, and we say that we don't consider valid pullbacks as inducements. I mean the lows of the valid pullbacks or the highs of the invalid, I mean the highs and lows of invalid pullbacks, we don't consider like the buy side and sell side liquidity that is associated with the highs and lows. All right, so let's see if price does anything here. All right, price consolidated at the area, right? There's no any interaction with anything. I dislike when price consolidates like that. Right, then price distributed without even a, you can see the inducement, where is it? The final TP is actually here, so let's see what price does. Right, so price made it out to the final TP. I think after this break of the 15 minutes, I think price was not clear, and of course I usually don't like placing trades when the price is not clear. So you can clearly see, like I said, once price has made it out to the higher time frame external liquidity, that's when now you get back to the higher time frame, so that now you mark your new trading range, of which will be ranging from this low all the way to this high. And that's how the top-down analysis is done. And you can see the lower time frame execution is always the greatest option compared to the direct entry, because it will give you the best risk to rewards. And even though it will give you the best risk to rewards, I usually recommend people to always consider the conservative ways. Like, always use the conservative ways. I know sometimes you may be a little bit greedy and aim for those 1:20, 1:15, 1:28, but they are not worth it over the long run. And just stick with the conservative ways, and you'll reduce the stress of these things, and you'll just seeing things like being great and great. So guys, this session was long, and that's the reason as to why I started it all the way. And yeah, I think I'm done with the lower time frame execution. I think I explained this good. In this case, it was a major inducement sweep on the higher time frame. Of course, that's a liquidity area sweep. Maybe, or like the other time, you may get a decisional POI mitigation or an engineering liquidity sweep, or our final entry module, that is the high probability one, extreme POI mitigation. But the process is of course the same. The glitch comes on the lower time frame, whereby the major inducement changes its role from being a major inducement to being a change of character. So guys, let me not make this session long. Let me end it here, and right now then I'm ready to answer any question.